Well, I'm delighted today to be speaking to Hugo van Zyl from Tax Forum. We're here in Johannesburg. Welcome, Hugo.
Thank you so much, David. Really appreciate the opportunity.
So we're going to talk about some of the latest trends from your practice, but first of all, it'd be great to hear just a little bit more about your background.
Thank you so much, David. I'm a chartered accountant, and way back in 1983, when the sad moment of Chris Hani's death happened, I decided to do tax and exchange control. So why it's so relevant, the murder of Chris Hani has just been released on parole in South Africa, so it's big news in South Africa, and it made me realize how old I am because they were, everybody was quoting how long he's been in jail. But leave that on the side. So roundabout that was 93. It was a month after I became an audit partner. So by that February, I left the audit practice and started a tax and exchange control consultancy company because my business partner left from South Africa to America. And he said, pay me when you can, because exchange control was extremely difficult. So I had a trial and error self-taught journey on the exchange control. Today it's a public document. Those days it was very confidential, only banks could see it. And so I would say today exchange control is probably a bigger part of my business than tax, but my main schooling is I have a master's in tax.
Right, and you deal with the globally mobile families, the South African connected globally mobile, of which the high net worth are always, they have children abroad, assets abroad. There's a complex picture, isn't it?
Yeah, so Tax Forum is the company in South Africa, and then I have a little Dubai practice that goes under the name Wegkaner, which means away African. And that is specifically for the expats or South Africans living abroad. But my main business remains South Africa, so I travel a lot, but home is still Cape Town in South Africa.
Fantastic. And just coming to some of the key destinations which South African families tend to invest or move to. I mean, the UK is obviously a big one, lots of historical ties. I mean, what do you observe of the trends for the UK and South Africa? Is there a lot of drive around education, investing in property, lifestyle, or is it also there's commercial drivers that you see
it's
going on?
At the moment, interestingly, a lot more commercial driven. Expanding South African companies into the UK, probably because now because of Brexit, it's easier to get the work visa or the seconded visa than actually do the investor visa, which I think has now come to an end. And I think sole rep visa came to an end, so a lot of people are now going to the UK. And then interesting, it's not so well advertised, but Jersey, for example, has a facility, if you do a substantial family office investment there, that I've had clients who actually immigrated from South Africa to immigrate into Jersey. And as you know, one of my well-known colleagues, Hanneke, has gone to Isle of Man starting a practice there. So it's quite interesting how the world has opened up to South Africa, and we don't always have to follow the so-called golden visa or investor visas. Using your trade activity is very, very important.
Interesting, and I think the moment, as you say, is right with UK and SA because Brexit, there's pressures, but there's a lot of alignment there, isn't there? And I think there's business opportunity for UK companies. I'm aware of a number that are setting up offshoring, but for skilled services to come and work with SA counterparts, and that's very encouraging, isn't it?
I call that COVID-19 business, because what happened is that the employees went to UK or got stuck in the UK, and suddenly South African companies realized they can have remote employees. But that caused a problem because then the UK wants to tax them and there's a branch and then we formalize it and create a subsidiary. South African exchange control is now relatively easy to obtain permission for a subsidiary abroad. And we even have exchange control rules that says that company can again reinvest in South Africa, the so-called loop structure. So on both sides, things went easier because of COVID. And I think now in the IT industry and the consultancy business, the remote or digital nomad is becoming a big part of it. And then quite interesting is I now see a lot of companies that are producing in South Africa, but putting up agencies in the UK. So although not part of the European Union anymore, it's a hop, skip and a jump and they're in the European Union. And we know the tax laws there, it's the language we understand. So UK still becomes an interesting hub for people trading into the European Union. I know a lot of people left UK because of that, but now I'm seeing a slow return of South Africans using the UK, both because of language and then their tax system is quite friendly towards South Africa, because remember, they may be going up to 25%, but in South Africa the reciprocal rate is 28%. So it then exempts you from South African top-up tax, because now you're above the high tax jurisdiction threshold. So it's really a very easy country to deal with, and then no dividends tax in the UK, withholding tax, that makes it very attractive to South Africans.
Good to hear. And I mean, for the rest of Europe, does Portugal, Malta, do these kind of or more the onshore, the France and Germany, does that feature for South African families as well?
But interesting, people going to Spain and Portugal. Spain, they call it the Beckham tax, and then Portugal, they call it the non-habitual NHR system. So long as you're being paid by a company that's not in that jurisdiction, then they give you exemption in those countries as a general rule. Not always. So a lot of people are using the UK company as their employer. Because remember, if they then continued as a South African employee, we have the expat tax problem, okay? Where if they go to the UK and they set up their new consultancy company in the UK, they do not have the expat tax because you were never resident there. They're very clear on a day's test. So I think South Africa need to quickly change from the ordinarily test to a day's test like the UK, because it gives certainty to people. No tax in the UK on your payroll because you're not physically not there. And the European country says, but it's a treaty country, we're not going to tax you. So effectively, we don't know how long, a lot of them are not paying tax anywhere unless they then spend too much time back in South Africa. So I do have a few clients, roots are still here, they're consulting for South African manufacturers. So if they spend certain days in South Africa, that will still be taxed. But it's still less than the expat tax, or so-called expat tax.
Interesting. And what do you see of the US? I mean, do you see South African businesses wanting to set up and be build business out in the US as a huge market?
We still have this Trump left over that people are very negative towards the US, I must be honest, but I see a lot more individuals going to the US. I think it's like EB5 or EB2, one they've relaxed it, quite interesting because they've rekindled it, and remember, I think Trump killed it, and now it's back on the card. So I'm seeing a lot of people doing planning there, not ready to go yet because there's a process, but we're doing pre-immigration planning. So I would say business, more Britain, UAE, and a little bit Europe. But the individuals, the biggest growth at the moment, I would say, is planning, is US, but it takes time.
Okay, interesting. And on the UAE, I mean, I've seen on your social media channels a lot of commentary and interest in you being actually present in Dubai.
Yeah.
I mean, tell us a little bit more about what business you see coming out of Dubai for you.
Let me first tell you the interesting story what happened.
Please.
Okay, so way back in 2019, just before COVID lockdown, I had to go and assist in family with a deceased estate because remember, their inheritance laws are very complex, Sharia law. And then got stuck there. And then eventually it was cheaper to get a residency permit than extending my holiday visa. And so I now have a residency permit in Dubai. And then when I wanted to expand my little South African business, which is a CC or closed corporation, the Reserve Bank denied me a bank account there. So I had to create a separate business. That's where Wegganer came from.
Okay.
So I had to create a separate business. But the UAE is interesting. It's one of the few countries, if you create the company, you have the work visa. No age restriction, no qualifying language. As long as you are healthy and don't have a reportable disease like TB, then they won't allow you in. Then you get in. And you have a business, and it's tax-free, but now there's company tax from 1 July. So suddenly where my big business was doing expats, immigrating them to the UAE because we have a treaty despite not paying tax in the UAE, suddenly now people are looking at the UAE as an interesting hub, as a small family office, because now it's no longer a tax-free zone, it's now a low tax jurisdiction. And hopefully UAE will be off the grey list very soon, like Mauritius. So it's becoming a very serious competitor with Mauritius. And the other reason why corporates are setting up there, it's a very interesting and cheap route to the UK. So many of my UK-based clients put their holding company or family offices in the UAE, because then they just expect the staff to fly via Dubai or Abu Dhabi into the UK.
Yeah.
And those flights tend to be cheaper than the traditional British Airways flights. And then remember our Kulula, which was the South African British Airways operated company, as went belly up. So it's sad, all these COVID things, but
it's the clever thing about Emirates, though, isn't it? How their service will actually bring people into town.
But then recently I see that their tickets have gone up in price, so the demand is there. It could be the World Cup, because I've seen a lot of my friends going to the World Cup, South Africans and non-South Africans, are using Dubai as their accommodation hub. Yeah. And someone sent me a picture of the flights. There's from Abu Dhabi every 10 minutes a flight on certain days to get to the games in time, so.
Very interesting, but it's a hugely dynamic environment, isn't it, in Dubai for professional services? I mean, also locally they're creating, new foundation laws. They're looking at what they're doing. They're trying to make DIFC very attractive. The common law provisions we were chatting before about. David Russell, who's a common contact. And they do feel like there's a mixture of a lot of inbound investment and interest, but also like they're really trying to innovate what they're doing to come to the global standards. Aren't they?
And they're really giving a lot of attention to foundations, making it credible, making it work for South Africans. That foundation then holds the trading company that will soon pay tax. I think the last little bit that will really get them going is if they could get a tax treaty between the US and UAE, because now from the US, there's a 30% withholding tax to the UAE on dividends. But from South Africa, for example, it's the lower 10%, so it's really better than the 20%. And then it's quite interesting, if they compare with other Channel Islands or Isle of Man as a foundation, you have to fly there specifically for meetings because people want substance. UAE says all board meetings must be in the UAE. That's their substance test, okay? So it's just easy to do it because it's a flying hub back into Europe, and they have this network of flights that's just absolutely amazing. So the two airlines, Etihad and Emirates, makes it very attractive. And then I can't remember what there's a new small one there that started, and they like the European airlines. I flew for £99 the other day, it's like next to nothing,
But even being in DIFC is quite exciting, isn't it? There's a buzz to it, and there's a real ecosystem that you can tangibly feel.
Absolutely, and what has happened is that the accommodation has become more affordable in DIFC and more expensive. In the beginning, the Palm was not very popular. Now suddenly the ultra-rich is moving from the DIFC to Palm, so us business people, when I go there, I do shortlets, and I stayed in the Rolex Tower. How fancy is this?
Yeah, wonderful, eh?
And it was actually far cheaper than most of the other accommodations. So, and there, because of the business interest, they have started what they call shortlets, so you can rent for a month, because that's the one downside of the UAE. I don't know if you know that you have to pay your rent in advance.
Oh, right.
So for an average South African, a couple without children, 1.2 million rand on day one to rent for 12 months.
Yeah, it's quite a hurdle.
Unless you have a good landlord that will take 4 checks, and they still work with checks, something we don't know in South Africa.
And I mean, one of the big growth areas in the wealth sector is obviously crypto and digital assets. Now, Dubai sees itself, Dubai is definitely positioning itself for that, but also other centres. I mean, from the tax perspective, what are you seeing on that front?
It's a tax and an exchange control perspective, because quite interesting is that our tax man first came and said, okay, we are changing the word cryptocurrency to crypto assets. Now it includes everything, kitties and the art pieces and the whole side of it. And it now becomes income tax unless you can show its capital gains. So it's the onus is on you to show that you're not trading, you're not switching between wallets. Okay. Plus, what we've seen is that the trustees are saying, it's a type of assets we're not comfortable in investing. Okay, because it's the control over it and the key and so on. But South Africans want the key to be held by a corporate or a trust that has longevity. Because if you die, remember the principle is the one who owns the key owns the crypto. So now what we're seeing is that the Jersey Trust sets up a company in Dubai where they allow them to, in a company, trade crypto. So then the trustees are not taking direct responsibility. And you can be the director of the UAE company, and you're now going to pay 9% tax. But in terms of our double tax treaty, if you can make it a substantial business, you have an office, it makes it possible that South Africa will not tax you. Not always, it's not easy, but you have to do a lot of what they call in UAE economic substance reporting. Board meetings must be there. One or more of the directors must have Emirates IDs. And it's becoming so difficult that banks won't open you a bank account for a company if one of the directors do not hold a residency permit.
Getting banking is tough, isn't it?
So they're trying to get off the grey list. That's the step. So I'm telling clients, it's a nice jurisdiction. You're getting the 9%, but if you're paying tax back in South Africa, we give you the credit for that. So it's no additional tax. The big difference is from 1 July next year, 9% in UAE, and then the balance, which is then 18% to get our new 27%, which will then apply in South Africa. So you'll have a top-up. Okay. But if you do it properly, you may not have a top-up in South Africa.
And I guess if they're buying and holding the asset that they see as a long-term appreciating asset, there's not necessarily a yield
gain. Yeah, and it's only taxed, and it's only taxed when they are sold. Now, interesting, I don't believe SARS will take that approach, but I saw a learned author recently refer to a gold coin case where the judge said when you buy gold coins, even if you hold it for a few years, the default is speculative because your only return is a gain. Okay. So it's quite interesting. If SARS takes that gold coin case, then some of the crypto, even if you hold it 3 or 5 years, could be seen as gains. But there was another court case which this learned author did not refer to, where I think it was a Greek national who held in South Africa gold coins, and his evidence was that he held these gold coins that if he needed to flee South Africa, he could take the gold coins with him. Okay. And the judge in that case said, but then the reason was not speculative. The reason was truly investment and wealth protection. So if you can show you're using a Dubai company as a wealth protection, and it's like one of your classes of assets, then you could get away with it. So I'm not too
careful
worried.
Advice is needed though, isn't it?
Oh, absolutely. And tracking record.
Yeah.
Because, you know, the sad thing is if we South Africans go onto the grey list as well, I still believe it won't happen, but it could obviously happen. Then the trustees in Jersey and the directors and fiduciary guys in UAE are going to ask a lot of source of funds rules. Okay. Which means if you don't keep absolute record of that, and that becomes a problem because we have what we call in South Africa, UAE uses the same words, centralized and decentralized wallets. Now the centralized wallet is the controlled, and you know, in Jersey we, for example, see they're regulated. But decentralized is that deep dark web. So apparently no one knows what's happening there. But I've recently seen in the UAE, there's companies that will give you a spreadsheet of that transactions. Okay, so obviously you must give them access to your record, but you can get that. And that brings us to an interesting topic, you know, is that when will the Channel Islands, for example, start having a custody service, which Switzerland, and you mentioned Singapore, and I know UAE has that already. Because I think in South Africa, from I think this month or last month, crypto is now regulated by our Financial Conduct Authority. And the more countries bring that into a controlled environment, then it becomes easier to invest. But we in South Africa has gone a little bit backwards, if I say it in inverted commas, exchange control. We may no longer buy crypto and even ETFs using South African credit or debit cards. So you must send your money from your South African bank account to your foreign bank account, and from there go into your wallet. You can't send it using your credit card to the wallet. So a lot of South Africans are still using our 50,000 Rand daily limit to get money there, but it's specifically forbidden in our exchange control manual.
And that custody and regulation piece is one that's evolving, isn't it? And but, you know, and we've seen with, you know, in Bahamas with the business going into administration, that a poorly run crypto exchange or platform is fraught with difficulty. So regulation has to come to the sector, doesn't it? Even though it's kind of in ethos, you know, they're trying to have this sort of decentralized.
And it brings an interesting debate because South Africans don't want that wallet in personal name, because if they pass away, it's very difficult to give that key to someone else. So you can have the password recorded somewhere, but you change it so often that it may not be part of the will or the schedule to your will, and it's changed. So one way to overcome it is to put it with a custodian, or to create your own custodian, being an offshore trust or an offshore company outside of South Africa. But now, obviously, the trustees are saying, you know, this is an asset that we're not comfortable with. And the more it becomes regulated, I think some trustees may change, but I do not foresee trustees easily accepting crypto. So we'll probably be forced, even if we have a safe custodian in Switzerland or Singapore, to use an underlying company and trade within that company.
And on the will planning generally, I mean, is this an area that you get involved in, or you work with partners to create will documents?
I am extremely involved, because remember, with my diasporic families, it is not always me writing the will, but I would consult with an American, with an English, because there's a lot of pre-immigration planning, and then often we need to then change the South African will, and so we don't want the South African executor to be in control of that assets, because if you get in very conservative executor, he may call that assets to be brought back to South Africa. Where exchange control just last year said, if I now inherit a foreign asset from my South African parent, I can now keep it there. In the past, I had to bring it back or get permission. Now, as the default, as long as my father or the uncle or aunt who bequeathed it to me held it as regularized, legal, I can then continue holding it. So it becomes very attractive to actually then have a foreign executor. And as you know, I think in Jersey, it's, for example, 15,000 is where the 1.5, where the probate is. If it's a bank account, you can have joint owners or joint signatory, but in crypto, you can't. Okay, so crypto doesn't have that joint ownership benefit because they don't, again, acknowledge partnerships. And then if you administer it in South African law, when you die, the partnership ends, deemed capital gains tax. So I want to be in a country where there's a bit of an enduring power of attorney. So that's why Jersey is so attractive. Now the trustees are saying we don't want it on our platform. But it's nice to hear Jersey is starting to regulate the industry. So it could be that people in the future, like having a Jersey-based bank account, then have a Jersey-based wallet because it's a more regulated industry. But again, it's a risky asset in current definition, you know. So,
and just moving away from crypto and just looking in the round, I mean, do you deal with tax disputes with the South African Revenue Service? What are some of the, I mean, I imagine there's myriad topics that come up, but what are some of the things that you might be dealing with?
The biggest one at the moment is what people in the industry call sham trust, but it's not really a sham trust, it's an ego trust. So you created a trust, but you actually control it. You don't have a third trustee or one person makes a decision and distributes it, and then SARS says, but you're controlling those assets, it's your control. The other one is obviously immigration, because now once you're out, you no longer want to pay capital gains tax. And in the past, we could tax immigrate without doing much effort. Now, everyone who wants to tax immigrate has to go through quite a rigorous process. But now this gap in between, from just ticking a box saying I left, no questions, to now a verification process. And if you sold in between, if SARS does not admit or agree to that backdated exit, they can collect capital gains tax. And you know, all tax authorities are going for the cash at the moment. So
the tax pool here in South Africa is not growing very quickly, is it? So they have to take this approach, don't they? Rigorous.
Yeah, absolutely. And the other one that we're seeing quite a bit is now on properties, because most of our tax treaty says South Africa has the first right to tax. They didn't monitor it very well, but now if you've tax immigrated and your property is worth more than 2 million, or the selling price per person is more, per taxpayer is more than 2 million, there's a withholding tax. And we're now seeing SARS raising penalties against attorneys. So it's not the normal taxpayer dispute, it's the third party dispute. So that's a big part. And then also this effective management, economic substance. And then I foresee, I'm not in that field myself, but transfer pricing are going to become a big issue. Even UAE, because if you pay 9%, SARS will allow the credit provided you only paid 9% on what is the minimum according to their rules. Because remember, they're now losing a 9% cash flow. Okay, so you could foresee problems there. And they've just recently had the whole review process of our transfer pricing.
And I suppose they're just working out who are the biggest fish in that environment. So you might not get caught, but actually if they think there's a lot of tax at stake, that's where they'll get into your
and
affairs.
The problem is they allow you to go, and then 1 year it's an inquiry, next year it's a full audit, and then suddenly there's this big audit process that's formal, and they want your records and see every policy document and things like that. So we see at the moment, by the time SARS goes into a dispute, they've been fishing around and they've asked you little silly questions and you answered incorrectly or incomplete or just buffed it off, didn't answer, and now suddenly. So also a lot of the disputes are because of negligence. People did not see the risk in that. So I have now changed to where when we start with these things, I say, who would you like to be your lawyer if this becomes a dispute? Because that person must read what I write to SARS. Because unfortunately, he can't go into dispute, claim something else, and I wrote this 16 months ago, you know, and it becomes embarrassing, and it actually, you know, just cuts you off at the knees, you know. So disputes is becoming a big issue because it's cash flow driven. And, you know, we have this now policy of pay now, argue later. So it's really a problem in South Africa.
And as CRS and Information Exchange kind of increase the speed of that, you know, the changes, because it's not credible anymore to have that sort of ostrich approach where...
Absolutely. I told the story yesterday in the Jersey Finance Roadshow that we see offshore fund administrators, part of South African banks, reporting to SARS. If you go into third-party information, it appears on your e-file. When I fill in your tax return, I use the average exchange rate for the year. Then SARS comes back and says there's a mismatch with the third-party information. But third-party report it typically in dollars, but in pounds, because you did it through a Jersey branch, but the underlying investment is in dollars. Now they convert on a monthly basis dollars to pounds and pounds to rands. And when they aggregate that rands over the year, it's a different figure than what I captured. And then SARS now, so clever, they just refuse to accept, they officially reject your tax return. And then we have to go through a very clever process of asking them to change the third-party documents. So the
the reconciliation of these.
Without taxman. So they may have other flaws, but the thing they've done very well is to provide for third parties to upload detail. I now tell a client when they live abroad and they say, do you want my tax information? I say, yes, I want it, but just as an honesty check, because when I log in, 80% of what you earned in South Africa is listed there. The one part that's not there yet is if you earned capital gains or if you had rental income. But I'm sure that the estate agents are now forced to report.
Yeah.
It will soon be there, but that's also going to be a problem because it's gross. You still have to pay from that your interest on mortgage bonds, you know. And unlike the UK, we can still claim interest. Soon, maybe only 70%.
Right.
But at least I think the UK can't claim anymore, you know. So.
Unless you're in a corporate structure in the UK. No, very interesting. And just in terms of like the wealth structuring toolkit here, I mean, trusts are commonly used, but also, you know, do high net worth investors use insurance wrappers, pensions? What are some of the things that you see people going for and using when wealth planning?
A lot of life insurance wrappers, but now true life insurance wrappers. You know what we've seen that they've developed in Jersey and other Channel Islands is that because it's a genuine life cover. It's not just a little 0.25%. You know, they have real life cover. Then we recently had the tax ruling against, I call it against pension fund wrappers. Very controversial. I'm one of those that believe that that's not binding on every fund because the funds are so different. But I think it put the red lights up that we have to get proper advice, and you need to go back to the administrator of that pension fund and asking, are you really registered as a pension fund? Is it quacking like a pension fund? And that belief that all these foreign pension funds were estate duty exempt is now off the table. You have to make sure that it's really, because there was that general belief, because South African pension funds fall outside of estate duty, that all international pension funds will fall outside our death duty or estate duty. And government was very quick to say that.
Because they must be widely used by expat workers to have a scheme in a tax-neutral location. It's very legitimate, isn't it?
High net worth individuals that never worked outside, they used their 10 million foreign investment allowance to contribute to that, okay? Because it was not subject to the anti-avoidance rules, the transfer pricing on loan accounts, because it's a contribution, it's not a loan. And the interesting thing is we've always reported those things because there's an obligation to report it. Nothing to say it's wrong, it's just we had to report it if it went over 10 million. And so we have the beauty or the safe net that we have reported those cases. I've not seen SARS backdating tax returns, so they've made the ruling. They may in the next tax filing season start questioning last year's and so on. But this paranoia in the country, I think, is a little bit unnecessary. We must just take note of that. And it was a binding private ruling, you know, so it's not, and we must also remember, those are not law. It does not create law. It's a ruling. A judge must take cognizance of it in court, but you still have the onus to explain your transaction. So it's not off the cards. I would still say people need to look at that, because from the estate administration perspective, coming back to the probate, okay, if you have 10 million rand in the Channel Islands and you do not want a joint account with your spouse for whatever reason, maybe your second spouse and that's for your first spouse children, then it still is a good tool for succession planning. So what we must stop doing is using these wrappers purely for tax. Okay, because we have an anti-avoidance rule that says anything that's purely for tax is a scheme. We have the presumption clause. Okay, so I always say to clients, make sure your reasons for doing it is justifiable, not tax. Okay.
And I guess the time when if people are setting up, say, UK entities or entities in the UAE, you know, the pension planning can sit well alongside that because you've got a corporate entity. And you've got the logic and the rationale behind it to fund a pension out of that.
Right, and we've had this conversation about why DIFC is so popular. They're the first one to now create pension funds in the UAE. Okay, there may be subsequently now trade-free zones with pension fund rules, but DIFC, being English law or English Privy Council, have now started pension funds. So that is quite nice because it's a real pension fund. It's registered, quacks like a pension fund, you know. So.
Terrific. Well, look, Hugo, it's been really, really interesting talking to you today.
Thank you so much.
And I look forward to sharing this interview.
And thank you for allowing South Africa to have a bit of a platform we really, really appreciate. You know, we still love our country. There's lots of problems and hope to see you in South Africa very soon.
Absolute pleasure. Thank you.
Thank you, Dave.
The latest technical content delivered through global conversations with professionals for professionals.